Good afternoon and welcome to the Takeaways podcast. On today's episode, we are talking about cross-border payments and remittances. And I have a person who is really well skilled to be able to take us through that, where the challenges are and where the opportunities are. I'm with Naco, and he will explain more on what he does and how he got to be a part of this space. Hi, good afternoon, man. How are you doing?
How are you, Ephraim? Good to be chatting to you again.
To dive straight into it, I want to know more, a bit about you and how you got to, get into the cross-border payments and remittances space. So if you could just share, a brief overview of your career and how you got to where you are at the moment.
Yes. No, thank you very much. My name is Naco Bolote. I am the head of cross-border payment and remittances for Access Africa across 15 markets across the continent. Now, just looking back, I think the easiest thing to say is that I'm a banker, or a product and segment owner by nature, from historically been in this business now for more than 20 years. Started my career with Deutsche Bank as a data way before there was a concept of data science. It was more data systems and MIS at the time. And I came back home to work with other banks in the local market, where my main focus was setting up business intelligence unit. At the time, it was a cutting edge field. And then I moved into product ownership, product design, as well as segment design, that whole value proposition design. I shifted to, obviously in this market, you shift across banks for growth. Eventually, I had a regional load where I was the head of products for the Southern region for Access Bank. It is becoming apparent, obviously, that where the economy of Africa is going, where the sovereignty of Africa is going, it's becoming important for us to be able to move money around the continent to create value, to aid in moving value through such things as after policies that guide or are trying to grow trade. I shifted into that space because it was, well, first of all, a great opportunity to innovate. The problems are many there. So it is exciting. It's an exciting space that covers, very important, that covers quite a deep range of fields. It's cross-sectional. It touches on politics. It touches on policy. It touches on trade. And fundamentally touches on people's day-to-day lives. And that is what excites me, Ephraim.
I think it's quite, like a career that you've had. So I want to start our conversation at the cross-border payments. I mean, I think over the last few years, there have been, a lot of the emphasis on, a concept of Pan-African trade, right? But even if we want to drive that, through, your policy, etc., the challenges of payments are still there, right? So if you can just share with me, from your work, the core challenges that, you have identified as impediments to cross-border payments across Africa, both, on the retail kind of things and then also on the business kind of things, yeah.
I think to understand the challenges of cross-border payments and remittances, we need to follow the overlying intention, which is really trade. So sometimes the challenges of trade by necessity become the challenges of cross-border payments. So there are multiple challenges, obviously. Some of it at a higher level policy. We are dealing with 54 markets. It's not just 54 governments. It's 54 ways of thinking about policy, 54 ways of thinking about currency management, 54 ways of thinking about governance, compliance. So you can imagine that even at a goods level, goods moving across borders, that is essentially a problem in itself. We have other layers that are not directly related to cross-border payments that affect trade and the way value moves. Infrastructure, railways, how long it takes to move from London to Cameroon. Is much faster than moving from Cameroon to Johannesburg. Railways, how do you move real goods of value across the continent? But To zone into the issue at hand, much more specifically, our problems with cross-border payments are anchored on fragmentation. This is what I call Africa, if you look at it closely, is obviously crying out for unity from Pan-Africanist. But before we even start that conversation, we just need to be aware of how fragmented we are overall. Fragmentation of ideas, fragmentation of even governance style, fragmentation of policies, fragmentation of, to bring it closer to the subject, fragmentation of payment rails. So the biggest question then is, how do we create a plumbing system so money can move in that plumbing infrastructure across the continent to support trade? It means we have to methodically deal with this fragmentation. Because the continent itself is fragmented, for me to send 1,000 pula or 1,000 kwacha from Zambia to Lagos, we still don't have smooth plumbing. And when I say plumbing, I mean the smooth rails that move from here to there without going via London, without going via New York, without going via other places where we are searching for, not quite sure what we are searching for, but I guess we are searching for unification. We are searching for someone to give confidence to our trade. Why do we need to do that? We need to introspect at a policy level, but at a structural level, we do that because we are searching for hard currency. We do that because every trade that we do almost has to have a foreign currency in between, US dollar, most fundamentally, but sometimes euro and other hard currencies. The question then becomes, at what point do we come to a level where we do not need an intermediary currency that anchors the value of our currencies? Will that time arrive? That is the real problem. The second problem is, these are not our rails. And speaking very tactfully but clearly, reflecting on the current history of where the world geopolitics are going, that becomes a real vulnerability at a sovereign level. It means you can easily be cut off the rails of global rails. So you can easily be cut off the rails, you can easily be cut off hard currencies. Is it a problem to mitigate? I think the question of financial sovereignty also comes into the picture. So I've mentioned a few problems, but fundamentally all of them come out of fragmentation. We are fragmented as a nation, and we are looking to solve that fragmentation by going via other people's assets, and that creates its own vulnerability.
And I think you brought out a really interesting topic, on the fact that a lot of trade, a lot of the intra trade that we have on the continent is still done in USD, right? But over the last few years we have had the rise of stable coins, especially on the retail side of things, right? What role do you think such new and emerging technologies are going to play to smoothen the current challenges that we have? Because I'm also I'm cognizant of the fact that even if we say that stable coins are a solution, at the end of the day they're still pegged to the USD, right? So we still have that problem where we really don't use our our own currencies, right? But as a new technology, what role do you see them playing in kind of trying to smoothen the challenges that we currently have?
It's a very interesting question that you ask, but you're also answering it directly, that fundamentally it does not answer the question in a sustainable manner, because it's still pegged to foreign currency, to the US dollar. So you are still at the mercy of the owners of and the governance around that currency, but it still has a big role to play in the short term. And it leads us back to the question that you really asked. I know I answered it with one overarching umbrella answer to say fragmentation, but under that fragmentation, there are other smaller problems. Relatively, there are still huge problems. The biggest problem that comes out of now needing to trade in US dollar is that the dollar is scarce. That is the first problem. The second problem is, even where it's not scarce, we ourselves as Africans tend to highly regulate it. We take very protective currency or exchange control mechanisms to hawk the dollar within our own local borders, which obviously by definition constrains trade. And even where it's available and there are no real legal, no real regulatory constraints, it's very expensive. And where it's available, no regulatory constraint, and you can afford to get it cheaply, you then have an issue of the regulations of having it cross the border. It means it's difficult to get instant money transfers. And that is perhaps where stablecoin can come in to resolve the issue in the short term. But for that to happen, it goes back to the way we as African leaders perceive it. If we start to, you can imagine that it's a new technology. It still needs to be sold to a lot of regulators across multiple sovereign central banks. And that is what is going to hinder it. But what I like about where Botswana sits, and this is something that I've always wanted to pursue if I had a little bit more time, is that our regulatory environment is a lot more liberal. It can actually be positioned very well to make us the epicenter of innovation around stablecoin. But the short answer on the stablecoin conversation is, yes, it solves issues. We've seen a tremendous amount of growth in the way it facilitates cross-border payments. I'll mention some of the partners that I have had the chance to be in the room with, such as Yellow Card and the type and the like. What they do is impressive because they take the bite out of liquidity issues. They take the bite out of pricing issues. They take the bite out of having to, scramble around looking for US dollar every time you want to make a transfer. But having said that, on the Botswana issue, it's one of the more liberal countries in terms of the way it perceives currency risk. And that is one thing that perhaps as a nation, you could leverage, look at closely to say, how do we start to attract, maybe not what I would call traditionally investments, but flows, where we become the bridge between multiple markets by allowing trade flows to go through our liberal markets. There is an opportunity as well on stablecoin to say, but how do you break away from the fundamental issue of depending on foreign governments? I mean, if you are using stablecoin and is pegged one-to-one to the foreign currency, you are still vulnerable. I still see in the medium to long term great innovation that could come out of Africa. My vision, although it's a personal one, is really how do we create a stable coin that is fundamentally African, designed for Africa, and is pegged by assets that we find in Africa. Assets of value, whether the basket, the technical experts in that field would determine whether that value is pegged by our own wealth, which is commodities. And could this coin be a centralized coin? Or would it be a regional coin? Or would it be sovereign to one state? Or would it be a private coin? But it's a huge field of innovation that is open to the market. If you're asking where opportunities are in cross-border payment, in currency, that is where I find that one of the biggest opportunities are. But the question then, what stops us? It is us. It is how we perceive ourselves as 54 nations. It is how we perceive our own risk, and how this issue, if you ask me, if frame comes back to one fundamental thing. Why don't we trust each other's currencies? Why we do not trust each other's currencies one-to-one? If we could answer that question at the continent, we would have solved half our trade problems.
I always hear people saying that especially in startups, etc., that, like Africa is such a market, etc., etc. The example I've been giving Speed, the guy who came to Africa and was able to travel, I think, to 20 countries in 28 days, and that it's easy for him to travel. But for me, as like an African, to be able to do that, I think I would spend, at least like 3 months trying to get, visa to there, to there, to there, to there, So I think, as you're already stating, the trouble is the trust that we have amongst ourselves, right? Once we can be able to address that, then I think that's when we can think of exploring ways to kind of have like a sovereign, either rails or currencies, etc., right?
Yes, no, you're right. I mean, listen, I when I talk about cross-border payments and remittances, I always struggle to keep it to that technical, narrow conversation, because when you look at it, it's actually trying to solve real life problems, and real life problems is people keep moving from country to country. If you are a trader, you want to move into a country to go check on the warehouse before you make payments, but if you can't even get a visa to go there, it impedes trade, right? But if it comes back to that same conversation, what is it that has us looking at each other sideways? I'm not at all saying that it's not legitimate. I'm saying there is something that makes it very difficult for an African country to accept another currency from another African country. And those are legitimate reasons. But what would it take to resolve them? I think, for example, speaking broadly without touching on any country, our currencies are very volatile. Why are they volatile? They're probably volatile because the fundamentals of a stable currency, a stable fiat currency, are not in place.
Over the last few years, right, to kind of like try to address this problem, like of cross-border payments, we have seen, like a lot of startups, like in fintech, and the amount of VC that has come into fintech in Africa has been quite a lot, right? And, these startups are trying to solve problems both like, like in liquidity, in discovery pricing, like in settlement. But there is also kind of like, like another school of thought that these startups are really just putting like a wrapper on the rails that already exist, and those rails don't belong to us, right? So I want to get your thoughts on this, right? What role do you think the innovation that we have had around, like fintech over the last, I think, 10 years or so have had in trying to address, like a majority of the core problems that we have with regard to cross-border payments?
That is a really fair observation and question. My answer to that is they're playing an important role of discovering problems, taking the first step at problems, defining problems. The issue is that, and where they come in handy, the issue is that the industry is a whole web of plumbing moving between continents. The problems are many, and they require multiple players to take a stab at them. There's problems around AML, KYC, compliance, governance, regulations. The beauty of these fintechs is that they can specialize on one narrow part of that value chain and solve it. I think majority of them honestly would not be able to handle the full spectrum of the planning that is required, and by necessity that lends itself now to collaboration. I don't particularly see them as being disruptive. I see them as ultimately knocking on their regular bank's doors for collaboration, for co-innovation. And that's the way I see it, that the traditional bank themselves will always struggle to narrow down their interest and to act as nimble as fintechs would. They would always struggle to even color outside the lines because sometimes fintechs have that risk appetite. to operate outside regulatory lines, knowing that they have the appetite and they have the nimbleness to respond. So in short, I think the future of fintechs is through collaboration with banks. Luckily, this industry itself is open to a web of collaborations, a web of networking. So your competitor is also your roommate in majority of these businesses. The entire problem is going to be solved by even banks themselves collaborating. Fintechs collaborating with fintechs collaborating with banks. It's not a very jealous industry. It's difficult to operate in a very siloed manner in this market. But I think when you look deep, you realize that everyone is sharing a bed with everyone. And that is the best way really to try to solve this problem. The only thing that suffers is obviously the margins, because there is not a lot of margins in this business.
We speak on the need for collaboration, etc., but at the moment, what would you say is the state of collaboration across the banks and the fintech startups?
It might not necessarily be easy on the startups, but for more established fintechs, there's collaboration. If you look at everywhere, I don't think there's a bank that operates in this market without collaborating with a fintech. The question then would be, how do we make room for the smaller startups to operate? Which then leads us back to, that conversation about regulatory sandboxes, about creating labs and deliberately as a bank, creating room for trial and error and acceptance of higher risk of failure. But there is collaboration. Is the collaboration with specifically uniquely African companies? Maybe not so much, but there is an opportunity for the more established fintechs to play with banks, especially if they come in and show that they are solving a very clear, pertinent, valuable problem. I could give examples of right now, everyone is looking to collaborate on the stablecoin conversation. If you can figure out how to smoothen the value chain of cross-border payment, you will find partnerships. I'll give you an example of one example is banks are now integrating them into MNOs. Banks that do not necessarily have the reach to ensure that the funds that they send can reach mobile wallets, can reach other banks instantly, need partners that can do that digital termination. Banks that do not have the means to, and I'm looking at a bank from the perspective, banks that do not have the means to reach out to customers that are MNO customers, giving that rails to MNOs. And this allows mobile wallet operators to send money across the world, across the continent. And this innovatively actually happens even outside the more established rails of SWIFT. So the continent is starting to create alternative ways of moving money around. I know I started with a very pessimistic outlook, but I was defining the problem. It's not to say that we are not solving that problem. The whole continent, specialists in my space, are busy trying to solve the multiple problems that I have shared with you. And we are solving them by collaborating with fintechs. The question that remains unanswered is, how do we do it? I don't want to conflate the conversation with us now empowering startups, but the reality is we do it with fintechs.
I want to move our conversation now to to remittances. I mean, the amount of the inflow of remittances in Africa is quite like a known story. I think like in 2024, I'm looking at the data here, a total of 104 billion USD like in remittances went into the continent, and that like it contributed over like 5% of GDP. So it's clear of the role that like remittances play in kind of like driving the economic growth in Africa, right? But again, to go back to the chat we had on like on cross-border payment, there are challenges, right? To start with, it's like it's incredibly still expensive to send money to Africa, right? So what headway do you think we have made in terms of like trying to like create products around remittances, and what room for innovation do you think is still there to continue this?
Yeah, so it's still very expensive actually, and to frame it another way, it's a very, very important part of our African economy. Another way to look at that is that we are exporting skills, exporting labor to the West. In return, we are getting back remittances as part of the GDP. And we've already spoken about how hard it is to have USD in our market or hard currency in our market. And that is one lifeline for most economies. Ghana alone gets about $5 billion every year from that diaspora. So it's a very, very, very important problem that needs to be solved, and it's growing very fast. But in short, we've seen entities come in to solve that problem very innovatively. Companies like the traditional international money transfer operators like Urea, Western Union, and MoneyGram have always been there. They have been solving this problem their own way. Very healthy margins, if you can get away with it, collaborating with banks, collaborating with MNOs to digitally for the last mile, right? For the receiver to get the funds. But to give you perspective of how fragmented this market is, I still go back to the word fragmentation. We have 97 players trying to solve this problem of moving money from the diaspora into Africa. And I'm not including SWIFT. 97. The question is, why so many? Is there really real value in? What do we do to scale this, to solve to punch the problem right in the face? So there's an opportunity there. The real area for me of opportunity is, and you are starting to see companies solve it, your Mugurus, is really where now money can be sent from a digital source in the diaspora to land as seamlessly, very seamlessly, digitally at the recipient, in the very same way that you send money internally from mobile money operator as a mobile wallet from your wallet, and it's received within country within seconds by the person you sent to. That's where real innovation is going to be. There's also the question of making solutions that are bank agnostics, making solutions that do not rely on the bank, where anyone can just pick up money, a digital app, and send money across the continent. Now, the issue that we face is almost always entirely regulatory. If whoever solves that issue first, or is able to frame that problem or navigate the regulatory landscape market to market, is going to win. When I think about what Access Bank, banks like Access Bank are doing, we have a deep network of countries of presence, which basically in the pipeline between 15 markets, 20 markets across Africa is there, the planning. The most important thing then is to find a way to plug one player from the diaspora into that network to allow money to move very smoothly across that planning system. There are multiple opportunities in this space, but I think majority of them are going to be solved by aggregation rather than fragmentation.
You've spoken on the fact that there are so many of the entities trying to solve this particular problem, right? What role do you think consolidation can play in kind of like ensuring that we pull together not only the resources, but also, innovation, and also like ensure that, there's kind of like, like fair fees for consumers, right? What role do you think, this consolidation, either through, like M&As, etc., can play in ensuring that we pull our efforts towards trying to solve like this particular problem?
So it's a good question. I don't think the pricing, I mean, obviously price generally reflects the risk and the amount of effort you have to put in. But as we continue to find ways to bring down the cost of operation and the cost of the risk around, especially currency risk, we will see price go down. I think to solve that problem, there is going to need to be a very strong collaboration between Pan-African banks. These are bigger institutions that have presence in multiple countries across the continent, right? And those IMTOs from the diaspora. We already have other continental players such as PUBs, I should name reference them, whose role is to create a pipeline, rails that connect Africa, right? So the fragmentation is the problem, but if you're able to, instead of connecting country to country to move money from Europe, if you're able to connect to one central point into Africa, and then the money is quickly distributed digitally to a final termination point, that will do a great work of bringing down cost. It's just one of the many ways, but the other point still around fragmentation is that the more unified our regulatory frameworks are, the less friction we have to deal with. The more regionalized we become, the less friction we have to deal with. Take the ZAF region, for example, in West Africa, that is almost all Francophone. That is financially integrated. They have almost quote unquote without a singular switch which you connect, and your money moves very swiftly. So there is a lot of hard labor on the engineering side. The architecture still needs to be perfected. The use cases remain the same. You have your uncle in Europe, he wants to send money home. You have your exporter you have your business partner in China. They want to send either goods back here or you need to send goods there. The use cases are the same. The question then is, how do we coordinate a much more integrated architecture instead of fragmented single lines to 54 markets? It's the single line of effort to 54 markets that are making this very expensive.
And also, if you just look at, I think one thing that any, innovator, like in Africa is going to tell you is that your product is only as good as the regulator allows it to be, right? I'll give an example, like in terms of the remittances, right? You are stuck with the FX controls in your market. Like in one day, a government can just decide to change the amount of like of the FX that like a wallet can hold, right? So it's just becomes, it goes beyond just the innovation, right? Because you can be able to innovate, but if the regulator tells you that you are not going to do this here, then you're pretty much stuck, right?
Yeah. I think I don't even know how this conversation can be had, where we assume collaboration and support from politics, and we assume support and collaboration from regulators to solve this problem, to have policies that are friendly to moving money across the continent. Obviously, there are a lot of schools of thoughts, from economic to politics, saying, okay, Botswana says, no, I will allow free movement of currencies in my market. South Africa says, yeah, I will do the same, but I will need you to observe a limit of this much per year. Another market like Ghana, I say, no, I'll give you a very stringent limit. I want all my money in country. Another market like Nigeria might say, I want to know every single dollar that you have. Actually, in fact, all the dollars must be saved with, I should have visibility of every dollar you have, every dollar that moves. I want to know, right? So then that becomes a whole array of fragmented worldviews on how currency should operate. And when you're trying to make to build a planning system that doesn't follow the same rules, you are going to sooner or later be met up with, issues of pipes that are not of the same radius, to use a metaphor, right? But I know the conversations are happening, Ephraim. I know the mood and the overall intention is moving, the trajectory is in the right direction. We have slowly, country by country, we are finding it much easier to operate in the countries, especially that when you get success in one market, you are able to then show that as an example to another market, but it's not easy.
Look, I think we've spoken quite, extensively on the challenges, right? And I don't want this to be quite a sad, episode, right? But over the years, what examples of the innovation around both the cross-border payments and the remittances have you seen that really gives you the hope and the confidence that in a few years I'll be able to send 100 pula to to a market in West Africa, and it will arrive as the value of 100 pula, or I will be in the UK and I will send £100 to my mother and it will arrive as almost £100.
I can't promise you that you are going to have a fee-less transfer of funds. I don't even think you are going to be able to get a free transfer of funds even in country, right? There is value being transferred here and someone needs to pay for it. That I can't promise, but I know that it will get cheaper and cheaper. On a positive one, I know that the market is open for collaborations. Every day we have real innovators. We have solved multiple aspects of the value chain fully that are talking to each other to find ways of collating, of putting together these that innovation for scale. That is what pleases me. What also pleases me is that we are starting to see multinationals in banking talking to multinationals in telco, talking to multinationals in trade, talking to multinationals in infrastructure or logistics, to come to a point where we solve these problems at scale. I've talked about, for an example, a cell phone company that has mobile wallet that operates in 15 markets would have the agreement to support the rails of a bank that is in that same 15 markets. And that would allow money to move as conveniently and as quickly as you moving money from a digital mobile money wallet within the borders of Botswana. That is the goal. But that's just on the remittance side. Similarly, on the cross-border payment side, we are starting to see movement of money being digitized. There is no real need to go to a bank. You can do it off your mobile, off your laptop. We are starting to see many banks integrating the movement of money into their platforms, supported not just by SWIFT, supported by digital mobile money operators, fintechs that move money around. So there is real innovation. We're also starting to see specialist solution providers, companies coming in to solve the issue of AML and KYC documentation, especially for the trade aspect. We are starting to see companies coming in to just solve one slice in the value chain. And sometimes that is enough. That is what's required. The last mile is also being very quickly solved. By last mile, I mean what you're going to start seeing disappearing across Africa. I know you have a visual of Africans going to a side shop to collect money from Western Union. That is going to start disappearing as money gets directly into their mobile wallets, as money gets directly into other various stores of value. The question that remains is, how do we do that in an integrated, seamless way? Right now it's happening in fragments. So there's lots of positivity. I don't want to sound pessimistic about what we are doing. What I'm particularly interested in personally is creating a platform for all of those so that they are not fragmented, at least at a level of cross-border payments and remittances. The other harder stuff might be a little bit out of my remit, such as aligning policies and so on and so forth.
And also, if you look at the conversation of payments and you kind of like try to drill into it, right? I mean, like it goes to other things like, our ability to be able to access credit, right? In that, obviously, like a bank can be able to borrow from its, balance sheet, right? But like a startup can't, does not have that. And also like a bank has like an advantage like in terms of like a licensee, etc., like in compliance and all that. So I guess what I'm trying to get at is that it's going to be like a collaboration to be able to address all these particular challenges, because a bank has those kind of like advantages, and then like a startup has like like a speed, like a cost efficiency, etc., etc. So at the end of the day, all these problems that we have spent the last, I think, almost an hour talking about are going to be addressed by us trying to figure out where can we work together.
No, you're correct. I think, to be fair, I would like to see more startups come into the market. But I think, to contribute to your point and your conversation, is to say everyone has to bring a little value, something that is clearly of value. It's very, very easy to collaborate with anyone when you can see that, no, this guy is bringing me a captive audience of 800,000 e-wallet users. This guy has already connected mobile wallets in 10 countries. So if I link up with him, he's able to help my last mile, right? Oh, this guy has already figured a way of talking to the diaspora abroad. He's got the marketing piece and he knows how to funnel their funds into my rails. I'm just giving examples of the value that everyone could bring. Or this guy has cracked the issue of managing KYC documentation dynamically in a way that can satisfy the regulators, and therefore I can do digital onboarding, instant digital onboarding of my customers. That is value. Those are the kind of things we are looking for. And I know that some of the problems in the startup space is they are typically led by brilliant innovators. But sometimes what's missing is the product customer fit. And once you crack the product customer fit, what problem are you solving and what value does it contain? It becomes much, much easier to sell the innovation, the technology. And I think that's one conversation we need to have as a continent. How do we help our innovators nail down the problem? You've seen other startups go from very, very small micro innovations to big behemoth unicorns, really, guys like Flutterwave. But the market is still open because Africa is huge. Africa has 54 markets, and each one of those markets represents a corridor.
As we close off our conversation, right, I want you to take out, like your crystal ball and tell me, like in 5 years' time, 10 years' time, what do you see as the state of both like cross-border payments and the remittances, like in Africa?
The way the trade conversation is going to roll out, the framework, the African Continental Free Trade Area, the way that is going to pan out, it's going to be fundamental to how money moves. If it's a success, it means much, much more volumes are required to move across the continent. I think that's going to be one big driver. I'm not entirely sure how we are going to help to facilitate that. But my view is that when it becomes obvious that trade is happening between the African countries, it's also going to be obvious that we need better ways of moving money around. and cheaper ways of moving money around. I think as the issue of currency, hard currency, right, US dollar in particular, becomes both geopolitically sensitive as countries realize that there's sovereign risk in not being able to move your own money around in your own continent. That might start to open up conversations around alternative means of transferring value between local currency. It's already happening. I think that might be accelerated by the realization that at any given time, you might be cut off the local market, the international market, and therefore you need an alternative ways of moving money. I think that will drive innovation. I can't predict what innovation would come out of it, but I suspect stable coin is going to come into the picture. I suspect that guys that understand the blockchain need to really start thinking boldly about solving for Africa. My suspicion is that there will be a coin or two that is embraced by a few markets, if not all, that is going to underpin trade across the continent. That coin might actually be a very substantial coin that is fully backed by tangible commodities. If there's one thing that Africa has that is stable, is commodities. I suspect that there is space for, I don't want to loosely say crypto, but there is space for that currency in this market. But I know that it's a fledgling industry that any innovator better look at as the future. I know that the trade is, from a geopolitics perspective, Ephraim, we are becoming a multipolar global market. So naturally, there will be the need to start considering some of the mature currencies like the renminbi and related currency, almost as hard currencies. We are going to need to, the trade between Africa and China is going to accelerate more out of necessity than anything else, and diversification, obviously. The question then is, how do we make sure those rails are opened? We innovate for them. We make it easy for funds to move between the continent, and that's another area where innovation is going to happen. Other areas are really around store of value, where customers are able to, hold their assets in a slightly more liquid way if they're not going to fundamentally use the USD. Is it on local currency? Is it on an alternate currency? Is it in your local market? Do you want to hold it in another market? And if you're going to do that, what are the rails that you're going to use to send out? But I think the biggest change that you're going to see in the way money moves across the world is going to be driven by the fear of being cut out of the global market, just like that. Everyone is going to want to have an alternative rails through which they move value. And that is essentially what we are starting to quietly see. It's not a subject that anyone speaks about loudly because it's politically sensitive, but it's now a necessity.
I think that's a great way to conclude our conversation. I would like to commend you on the incredible work that you have done, over the years on this space. As I already stated at the beginning of the podcast, right? Without cross-border payments, the ability of trade to be able to proliferate across the continent is going to be so complex. And still, if we don't address the challenges that we had around remittances, etc., we risk cutting off 5% of the GDP that comes from the remittances, right? So I think it's a great work that you and the team are doing around this, and I wish you guys all the best in 2026 and beyond.
No, thank you very much, Ephraim. Thank you. I think I actually should return the compliment and say I'm impressed by how you are able to, allow this conversation to go to the right brains, to the right spaces, to be heard in the right corners. And I think for some of us who sometimes just buckle in our corners and do the work, it's sometimes important to reflect on the market broadly and exchange ideas with similar-minded thinkers. So thank you for your work as well.
All right, 100%, man. Cheers, man. Enjoy your day.
Thank you. Thank you, friend.